Public meeting in the board's conference room at the board's offices on the 16th floor of 2 Penn Center. Student to section 21-15 of the Philadelphia Code. Electronic recording of this meeting will be made with the Microsoft Teams Office technology and by audio recording. Electronic recording will be made available to the public online on the board's website without charge within 10 days. Please note that you consent to such recording by attending, participating, or speaking at such meeting. Our first order of business today is the motion to adopt the rules of order that the board is used for our in-person public meetings that are electronically recorded. The purpose is to help ensure that accurate and complete audio or audio-visual recordings of the meeting are heard to comply with our code requirements. Motion to adopt these procedures have been made and seconded. Is there any discussion? Hearing none, we'll go to the roll call. Ryan? Marshall? Kara? Paul? Anya? Willie? Carol? Motion carried unanimously. Item 2, motion to approve our minutes from the October 24th board meeting was being properly seconded. Any discussion? Hearing none. Brian? Marcia? Kara? Paul? Andrew? Willie? And Carol. Motion carries unanimously. Item 3 is the motion to approve the consideration of 131 pension applications and 58 withdrawal applications. Any discussion? I'll just properly send a motion. Hearing none. Ryan? Nikita? Marcia? Kara? Paul? Andrew? Willie? And Carol. Approved. Motion carries unanimously. Before we move into section 4, I just wanted to take the chance to recognize Dr. Burke, who's here with us today. Thank you for the SNAGMA team for inviting us. And I'll give him a second to finish with your light.
I apologize. So I'm very happy to join. I've worked with the committee for 21 years. My background is emergency medicine and occupational medicine. I've worked at level 1, level 2 trauma centers, Cresfield, and Camden, at the suburbs. So I have seen anything could possibly happen. On a part-time basis, I do occupational medicine and worked with three medical directors so far. And you're very privileged to be asked to work in this capacity to pension board with everybody else and all the departments I've worked with.
Dr. Welcome.
Dr. Burke, you're welcome to stay. Of course, we have a large number of cases today. You want to hear about the particulars of the case necessarily, but thank you for coming before us. Any questions you have concerning the cancer fund, please reach out.
Thank you so much.
Section 4, I would like to have a party to read this. With case 4A. A motion to approve the service connected disability benefits for Anthony Murray was made and properly seconded. Any discussion? Hearing none. Brian?
I approve.
Marcia? Approved. Carol? Approved. Paul?
Approved.
Andrea? Approved. Lily? Motion carries unanimously. Case 4B. Motion to approve the service connected disability benefits for James D. Williams was made and properly seconded. Any discussion on 4B? Hearing none. Brian?
I approve.
Shiva? Marcia? Karen? Paul? Andrea? Willie?
Approved.
And Carol.
Approved.
The motion was 4-3 with 1 extension. As chair, I'll vote to deny. So the motion fails 4-4. 1 extension. Case 4C, motion to approve the service connected disability benefits for Thomas E. Hogan was made and properly seconded. Any discussion on 4C? Hearing none. Brian?
I'll stay.
Sheeta? Marcia? Kara? Paul? Andrea? Willie? And Carol. Motion fails 0-3 with 5 abstentions. Case 4D, a motion to approve the service connected disability for Jerome L. Stinson was made and properly seconded. Any discussion on 4D? Brian?
I approve.
Sheila? Marcia? Karen? Paul?
Approve.
Andrea, approved. Willie,
Approve.
and Carol.
Approve.
The motion carries 5-2, 1 abstention. 4E, motion to approve the service connected disability benefits for Bernard J. Johnston was made and properly seconded. Any discussion on 4E? Ryan?
I approve.
Sheila? Marcia? Approved. Sarah? Paul?
Approve.
Andrea? Approved. Willie?
Approve.
And Carol.
Approve.
Motion carries 7-1. Case 4F, the motion to approve the service connected disability benefits for the Betsy Sonico was made and properly seconded. Any discussion on 4F? Brian?
I approve.
Sheila? Marcia? Approved. Sarah? Approved. Paul?
Approve.
Approved. Willie?
Approve. Approve.
Motion carries unanimously. Case 4G, a motion to approve the service connected disability benefits for Heather Andrews was made and properly seconded. Any discussion on 4G? Brian?
I approve.
Sheila? Approved. Marcia? Approved. Sarah? Approved. Paul? Andrea? Approved. Willie?
Approve.
Carol?
Approve.
Motion carries unanimously. Case 4H, motion to approve the service connected disability benefits for Judy Bond was made and properly seconded. Any discussion on 4H? Brian?
I approve.
Sheila? Marcia? Approved. Tara? Paul?
Approve.
Andrea? Approved. Willie?
Approve.
And Carol?
Approve.
Motion carries 7-1. 4I, motion to approve service connected disability benefits for Kirsten Bowers was made and properly seconded. Any discussion on 4I? Brian?
Abstain.
Sheila? Marcia?
Deny.
Tara? Paul?
Abstain.
Andrea? Approved. Willie?
Approve.
And Carol?
Approve.
Okay, the vote was 3-2 with 3 abstentions. As chair, I will vote to deny, so the motion fails 3-3 with 3 abstentions. Case 4J, a motion to approve the service connected disability benefits for Shane E. Darden was made and properly seconded. Any discussion on J? Hearing none. Brian?
I approve.
Sheila? Marcia?
Approve.
Willie?
Approve.
Carol?
Approve.
The vote was 4-3 with 1 abstention. As chair, I'll vote to deny, so the motion fails 4-4 with 1 abstention. Case 4K, motion to approve the service connected disability benefits for Christine Familio was made and seconded. Any discussion on K? Hearing none. Brian?
I approve.
Sheila? Marcia?
Denied.
Tara? Paul? Andrea? Willie?
Approve.
Carol?
Approve.
The vote was 4-3 with 1 abstention. As chair, I'll vote to deny. So the motion fails 4-4 with 1 abstention. Case 4L, the motion to approve the service connected disability benefits for Jacqueline Conway is being properly seconded. Any discussion? None. Brian?
I approve.
Sheila? Marcia?
Denied.
Sarah? Paul?
Abstain.
Andrea? Willie? And Carol? Motion fails 0-3 with 5 abstentions. 4M, motion to approve the service connected disability benefits for Natalie D. Crone was made and properly seconded. Any discussion on M? Hearing none. Brian?
I approve.
Sheila?
Denied.
Sarah?
Approve.
Andrea? Approved. Willie?
Approve. Approve.
Motion carries 5-2 with 1 abstention. 4N, a motion to approve the service connected disability benefits for Carly Halbert was made and properly seconded. Any discussion on N? Brian?
I approve.
Sheila? Marcia?
Approve.
Sarah?
Approve.
Paul?
Approve.
Andrea? Approved. Willie,
Abstain. Approve.
motion carries 7-1. 4-0, the motion to approve the service connected to disability benefits for Richard C. Allen was named, properly seconded for the discussion. Hearing none, Brian,
Abstain.
Rashida, Marcia,
Deny.
Tara, Paul,
Abstain.
Andre, Willie,
Abstain.
and Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4P. Motion to approve the service connected disability benefits for Aaron and Johnson was made and seconded. Any discussion? Hearing none. Brian,
I approve.
Rashida, Marcia,
Deny.
Sarah, Paul,
Approve.
Andre, Willie,
Approve.
and Carol.
Approve.
Vote was 4-3 with 1 abstention. As chair, I will vote to deny. So the motion fails 4-4 with 1 abstention. Case 4Q, the motion to approve the service connected disability benefits with Christopher Holman was made and properly seconded. Any discussion from 4Q? Hearing none, Brian,
I approve.
Rashida, Marcia,
Deny.
Carol,
Abstain.
Paul, Bill, Andreas, Billy,
Approve.
and Carol.
Approve.
Motion carries 5-2 with 1 abstention. 4R, the motion to approve the service connected disability benefits for Kevin J. Lewis was made and properly seconded. Any discussion on R? Brian,
I abstain.
Sheila, Marcia,
Deny.
Sarah, Paul,
Abstain.
Andre, Willie,
Please.
Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. 4S, motion to approve service connected disability benefits for Lamont Stokes made and seconded. Any discussion on S? Brian,
I approve.
Sheila, Marcia,
Approve.
Aaron, Paul,
Approve.
Andre, Will,
Approve. Approve.
motion carries 7-1. 4T, motion to approve service connected disability benefits for Michael A. Mills was made and seconded. Any discussion on case T? Brian,
Abstain.
Sheila, Marcia,
Deny.
Tara, Paul,
Abstain.
Adriana, Willie, Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4U, a motion to approve the service connected disability benefits for Doreen P. Berg is made and properly seconded. Any discussion on you? Hearing none, Brian,
I approve.
Sheila, Marcia,
Approve.
Tara, Paul,
Approve.
Andrea, Willie,
Approve.
Carol.
Approve.
Motion carries 7-1. Case 4B, motion to approve service connected disability benefits for Polly Merrick with made and properly seconded. Any discussion on the Brian,
Abstain.
Sheila, Marcia,
Deny.
Paul,
Abstain.
Andrea, Willie,
Abstain.
Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4W, motion to approve service connected disability benefits for Thomas J. Owen was made and properly seconded. Any discussion on W? Brian,
I approve.
Sheila, Marcia,
Approve.
Karen, Paul,
Abstain.
Andrea, Willie, Karen.
Approve.
Motion carries 6-1 with 1 abstention. For X, motion to approve the service connected disability for Thomas III was made and properly seconded. Any discussion on 4X? Hearing none, Brian,
I approve.
approved. Karen, approved. Paul, Andrea, approved. Willie,
Approve.
and Carol.
Approve.
Motion carries unanimously with case 4Y. Motion to approve the service connected disability benefits for Lamar Wilkerson was made and properly seconded. Discussion on case Y. Hearing none, Brian,
I approve.
Rashida, Marcia, Carol, Paul,
Approved.
Andrea, approved, Lily,
Approved.
Carol.
Approved.
Motion carries unanimously. Case 4Z, motion to approve the service connected disability benefits for X-ray Chavez was made and properly seconded. Any discussion on 4Z? Brian,
Abstain.
Sheila, Marcia,
Deny.
Tara,
Abstain.
Paul,
Abstain.
Andrea, Lily,
Abstain.
Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4AA, motion to approve the service connected disability benefits for Anthony Lojado was made for seconded and it was scheduled on delay. Hearing none. Brian,
Aye.
Sheila, Marcia, Carol,
Abstain.
Paul,
Approved.
Andrea, approved, Lily,
Approved.
and Carol.
Approved.
Motion carries 5-2 with 1 abstention. Case 4BB, motion to approve service connected disability for Yvette D. Bradley was made and properly seconded. Any discussion? Don't read yes.
So, yeah, I would like to table this for more information because I believe part of the, service connected disability thing with PTSD. And I didn't see any, all the doctors said they do not speak to the, yeah, but I don't see no report from any of the doctors, he can just do so or not, so did she, go? She just, but,
Move plan to table with Dr. Cohen, who's the psychiatrist, did apply to the PTSD.
but I didn't see that, so, yeah, so, yeah, I'd like to table more.
Okay.
Is there a second to the alternative?
Second.
A motion to the table, case 4BB, for 3 days was made and properly seconded. Any discussion on the alternative motion? Hearing none. Brian, Sheila,
For the table.
the table.
Marcia.
Okay, approved. Tara, approved. Paul,
Approved.
Andrea, approved. Willie,
Approved.
and Carol.
Approved.
The motion carries, the revised motion carries unanimously. Case for CC, a motion to approve the service of connected disability benefits for the Briggs. Made or properly seconded. Any discussion on case for CC? Hearing none. Brian. Sheila. Approved. Tara. Approved. Paul. Andrea. Approved. Willie.
Approved.
Approved.
Motion carries 7-1. For DD, a motion to approve the service connected disability benefits for Pablo Cordero was made and properly seconded. And discussion on 4DD. Hearing none. Brian. Sheila. Marcia.
Denied.
Tara. Paul.
Abstain.
Andrea. Willie.
Abstain.
Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4E. Motion to approve the service connected disability benefits for Dwayne Corley was made and properly seconded. And any discussion on 4E. Brian.
Abstain.
Sheila. Marcia.
Denied.
Tara. Paul.
Abstain.
Andrea. Willie.
Abstain.
And Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4F. A motion to approve the service connected disability benefits for Portia Everett was made and properly seconded. Any discussion on 4F? And none. Brian.
I approve.
Rashida. Marcia. Approved. Tara. Approved. Paul.
Approved.
Andrea. Approved. Willie.
Approved.
Carol.
Approved.
Motion carries unanimously. Case 4GG. Motion to approve service connected disability benefits for Lynette Von Troy Toll was made and properly seconded. Any discussion on GG? Brian.
I approve.
Sheila. Marcia. Tara. Paul.
Approved.
Andrea. Approved. Willie.
Approve.
and Carol. Motion carries 5-2, one abstention. Case 4 a motion to approve the service connected disability benefits for Eric A. Friend, eliminated and properly seconded. Any discussion on H? Brian?
I'll stay.
Rashida? Dana? Marcia? Dana? Tara? Paul? Andrea? Lee?
Abstain.
Carol?
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4 motion to approve the service connected disability for Jamila S. Hilliard was made and properly seconded. Any discussion on 4I? Hearing none. Brian? Marcia?
And I.
Tara? Paul? Andrea? Willie?
Approve.
Carol?
Approve.
The vote was 4-3 with 1 abstention. As chair, I will vote to deny, and the motion fails 4-4 with 1 abstention. Case 4JJ, a motion to approve the service connected disability benefits for John J. Gorman III was made and properly seconded. Any discussion on J? None. Brian?
I,
Rashida? Marcia?
And I.
Tara? Paul?
Approve.
Andrea? Willie?
Approve.
Carol?
Approve.
The vote was 4-3 with 1 abstention. As chair, I will vote to deny. So the motion fails 4-4 with 1 abstention. For A, a motion to approve the service connected disability benefits for Stephen T. Johnson was made and properly seconded. Any discussion on K? Brian?
I'll stay.
Rashida? Marcia? Tara? Paul?
Abstain.
Andrea? Willie? Carol?
Abstain.
Motion fails 0-3 with 5 abstentions. For L, a motion to approve the service connected disability benefits for Stephanie M. Jones was made and properly seconded. Any discussion on L? Brian?
I approve.
Rashida? Marcia?
And
Tara? Paul? Andrea? Willie? Carol? Motion carries 5-2, 1 abstention. For M, a motion to approve service connected disability benefits for Joseph Maddox was made and properly seconded. Any discussion on M? Hearing none. Brian?
I'll stay.
Rashida? Martha? Carol? Paul?
Abstain.
Andrea? Willie?
Abstain.
Carol?
abstain.
Motion fails 0-3 with 5 abstentions. For NN, a motion to approve the service connected disability benefits for Cornell family is made and properly seconded. Any discussion on N? Hearing none. Brian?
I'll stay.
Rashida? Marcia?
And I.
Sarah? Paul?
Abstain.
Andrea? Billy?
Abstain.
And Carol?
Abstain.
Motion fails 0-3 with 5 abstentions. For O, motion to approve the service connected disability benefits for Michael Roadfowl was made and properly seconded. Any discussion on Marcia? Paul?
Approve.
Andrea? Billy? Carol? Motion carries 7-1. For P, motion to approve the service connected disability benefits for James A. Robinson was made and properly seconded. Any discussion on P? Brian?
I approve.
Rashida? Marcia?
And I.
Carol? Paul?
Approve.
Andrea? Willie? Carol?
Approved.
Motion carries 5-2 with 1 extension. For Q, motion to approve service connected disability benefits for Ricardo Gonzalez, who made and properly seconded. Any discussion? Hearing none. Brian?
I'll stay.
Marcia? Tara? Paul?
Abstain.
Andrea? Willie?
Abstain.
Carol?
Abstain.
Motion fails 0-3 with 5 abstentions. For R, Motion to approve the service-connected disability benefits for Eric Thompson was made and properly seconded. Any discussion on four double R? Brian?
I approve.
Sheila? Marcia? Approved. Tara? Approved. Paul?
Approve.
Andrea? Approved. Billy?
Approve.
Carol?
Approved.
Motion carries 7-1. For double S, motion to approve the service-connected disability benefits for Mary Keith Helmsville was made and properly seconded. Any discussion on for double S? Brian?
I approve.
Rashida? Marcia?
Denied.
Sarah? Paul?
Approve.
Andrea? Approved. Willie?
Approved.
Carol?
Approved.
Motion carries 5-2, 1 extension. That moves us into section 5. Did you get in this year? Your first notification up to date, Ron? All right. Page 5A, motion to approve the request to purchase pension credit for prior governmental service by Eric Hampton is made and properly seconded. Any discussion on 5A?
I have a quick question on that. The member states in his appeal that we approved a purchase for Gerard College previously. We confirm that that's false.
That's correct. Check machine.
Okay. That's not be that. Exactly right. Thank you.
That's the same question I had.
Any other discussion on
I
5A?
don't know, second question, you can say. No, my question.
Hearing none, we'll go to the roll. Brian? Rashida? Marcia?
Denied.
Carol? Paul? Andrea? Willie? And Carol.
Denied.
Scale 0-8 moves us into old business in case 6A. A motion to approve the application for service-connected disability benefits for Tiara Summers was made and properly seconded. Any discussion on 6A? Hearing none. Brian? Rashida? Marcia? Sarah? Paul? Andrea? Approved. Willie?
Approved.
Motion carries 5-2 with 1 abstention. Case 6B. Motion to approve the application for service-connected disability benefits for Crystal Crosby was made and properly seconded. Any discussion on 6B? Brian? Rashida? Marcia? Approved. Tara? Approved. Paul? Andrea? Approved. Willie?
Aye.
And Carol?
Approved.
Motion carries unanimously. Case 6C. Motion to approve the application for service-connected disability benefits for Gary Anya was made and properly seconded. Any discussion on 6C? Brian?
I approve.
Marcia? Eric? Paul?
Approve.
Andrea? Willie?
Approved.
And Carol? The vote was 4-3 with 1 abstention. As chair, I'll vote 2-9, so the motion fails 4-4, 1 abstention. Is 6D, a motion to approve the application for service-connected disability benefits for William Hill was made and properly seconded. Any discussion on 6D? Hearing none. Brian?
I approve.
Rashida? Marcia?
Denied.
Tara? Paul? Andrea? Approved. Willie?
Approved.
And Carol?
Approved.
Motion carries 5-2 with 1 abstention. 6E, a motion to approve the application for service-connected disability benefits for Amanda Levy was made and properly seconded. Any discussion on 6E? Hearing none. Brian?
I approve.
Rashida? Marcia?
Denied.
Tara? Paul? Andrea? Willie? Carol?
Approved.
The vote was 4-3 with 1 abstention. Mr. Chair, I'll vote to deny, and so the motion failed 4-4 with 1 abstention. 6F, motion to approve the application for service-connected disability benefits for Sandra Gondu Morales was made and properly seconded. Any discussion on 6F? Brian?
I approve.
Rashida? Marcia? Approved. Sarah, Paul,
Approved.
Andrea, approved, Willie,
Approved.
and Carol.
Approved.
Motion carries 7-1. 6G, motion to approve the application for service connected disability benefits for Diane Fontaine was made and probably seconded. Any discussion? Ready? Brian,
And I,
Rashida, Marshall,
And I.
Sarah, Paul,
No.
Andrea, Willie,
Yeah.
and Carol. Motion fails 0-8. 6H, motion to approve the application to change survivorship designee regarding John Kennedy deceased was made and properly seconded. Any discussion on 6H? Hearing none, Brian,
and I,
Marcia,
Aye.
Timothy, Paul,
Deny.
Andrea, Willie, and Carol.
And I.
The motion fails 0-8. Case 6I, a motion to approve the application for service connected disability benefits for Sasha Lindsay was made and properly seconded. Any discussion on 6I? Hearing none, Brian,
I approve.
Rashida, Marcia,
No.
Tara, Paul,
Approved.
Andrea, Willie,
Approved.
and Carol. The vote was 4-3, 1 abstention. Chair will vote to deny, and so the motion fails 4-4 with 1 abstention. Case 6J, motion to approve the application for service connected disability benefits for Tony Rogan was made and properly seconded. Any discussion on 6J? Hearing none, Brian,
I approve.
Rashida, Marcia,
Approved.
Tara, Paul,
Approved.
Willie,
Approved.
Carol.
Approved.
Motion carries unanimously. 6K, a motion to approve the application for service connected disability benefits for Terrence Williams was made. Seconded. Any discussion on this? Okay. Hearing none, Brian,
I approve.
Rashida, Marcia, Tara, Paul,
Approved.
Andrea, Willie,
Approved.
Carol.
Approved.
Motion carries 7-1. And 6L, motion to approve the application for service connected disability benefits for Dean Yates was made and properly seconded. Any discussion on 6L? Hearing none, Brian,
I approve.
Rashida, Marcia,
And I.
Tara, Paul,
Approved.
Andrea, Willie, Carol.
Approved.
35-2, 1 abstention. And that most of what brings on it.
Good morning, everyone. First, thank you for your patience with the number of cases out there. We had the delays, so I understand. We got the reports that we want to get members to. Also, Denise and Miranda, Herculean task, getting everything ready. You did a hard job. Thank you.
You got it.
The medical panel RFP is out, closes December 20th. We've sent several notices to hospital providers out there. So we will do that, so touch response with that. Once it closes. The trustee election RFP is ready and will be submitted next week with those things. Soon as posted. Response. Then at some point in the next several months, you'll get a detailed schedule of similar to this. Again, look for it in the fall for the actual election. Prior to that, is information. The December monthly pension tax again, December about that. There's a new process the city's adopted, the administration adopted, specifically it's the quarterly budget review. So we'll be participating in that on the 18th. It's not a full budget review, it's an abbreviated version, but that, I'll let you know how it goes.
Last one.
The fiduciary duty seminar, Josh will be scheduling that, it's the 4th seminar. We hope to have it for the next 4 weeks, but we're shooting for mid-January. That should reach out specifically to receive those who may.
It's a request to try to avoid, and then cancel that holiday weekend.
Well, we would try to do a good old January. The drop interest rate, again, we will let you know right after 1/1/25, what the rate will be for the 1 year. But remember, pursuant to the code 12375B.2, it's the lesser of A, January 1st, 1 year US T-bond rate, or 1/2 of the assumed rate of time. Last year was 1/2 of the assumed rate of time, so 1 year T-bond rate of time. 675, roughly 2.68% was the current rate. Before that, 3.7. Prior to that, in 2022, that was 0.9. Remember, the new job for those, by new, I mean, those post 20 legislation are subject to variable drop rates, during the years to drop based on the already or lesser and the super rate. We'll keep you posted on that. Quick amount that. And just quickly, I don't have numbers yet, but I do have a projection from the actuary. I don't know what the funding percentage will be. We'll hear all that in February. But I can tell you that we're projected to be 100% funded 1 year sooner this year than we were last year. So I assume the funding percentage right now is 62.2%. That's going to be mid-60s somewhere. But let me just say this. Okay? Back in 2016, right before the reform started, this fund was projected to be 80% from the tax 2032. Under the new projection that we will get in February, we are projected to be 100% funded. Not 80, but 100%.
By when?
2032.
Okay.
That's a huge difference. I mean, that's a 20-point swing just in those handful of years, 78 years. And that goes to the board and the unions, the administration. And just a note about fiduciary duty. So, fiduciary duty, Josh, Chris, myself, and the rest of the pension staff, each of you, and Ron and Jackie specifically, we will continue to carry out collective fiduciary duty, including that the funds, this fund will be used exclusively for the benefit of the members. Because that's what the statute requires, that's what is required. The law department has assisted us in that. This is a trust established and managed for the exclusive benefit of the employees and the beneficiaries, not for any other purpose. If you have my word, Chris's word, and Josh's word, we use all of that legal, business, and other acumen that we have to place for that to make sure that no one tries to cheat things. But I appreciate your support and your help in doing that. So that's it.
Key to the city getting there early was we now have 700 million extra dollars. Yeah.
That's right. Once we get to 100% funded, remember, that's it. We will be operating, as you like to say, Brian, on the rules of policy going forward, on that going forward, which greatly enhances the revenue see available for other things. And that's great. That is, especially for the elected representatives, I will say this, and for the controller, who is the city's fiscal watchdog, right? To use money from the pension fund is not always an easy decision. It's competing interests, but each of you, the elected folks, have convinced the unions it's in the best interest in the long term of the members to have a strong pension. The controller has done that, and Rob's not here, but Rob and Jackie collectively have done that for the administrations, and all the administration trustees have supported that. Even recently, the managing director when somebody inquired about a pension issue, he said the pension fund is an independent board. Here's Frank's contact information. So it's very important to realize that this is an independent. Again, it's set up as a trust exclusively for the benefit of the members and the beneficiaries. And if we keep that in mind, I think we'll be well served in the near future. So thanks each of you for that. And I hope you continue to work with it.
And we'll pass this information along to people, right?
Yeah.
Any other new business before the board?
Yes, I know this was considered in the past, but I know this paperwork, we don't usually get this, but would the board consider purchasing laptops as opposed to?
Carol put you up to the.
No, actually did not. Actually did not.
No,
Yeah,
I
yeah.
told them it went on deaf ears. I've been begging y'all for years.
The answer is yes. So-
And it went on deaf ears. I said, so now you talk about it.
And I think the way to do it might be. So it's easier to carry, transport. And again, you don't need internet wireless access. You download the cases to the device you have access to. So yes, it's a good idea. I've seen Renee here in the past, the solicitor, when she's here, pull up her laptop for the cases. Obviously, the city folks can do that. They bring a laptop with me if they like to. I get the cases every month. I get an email. I just separate forward the benefits, investments for a copy. I download all the cases. Because remember, I download them all forward. Actually, they all come up with the merit for last week, so you can follow them pretty easily. And again, you don't get wireless access. Right there on your hard drive. So yes, really, yes, Carol. We would be happy to do that, especially since the number of applications not appear to be used at this point. So please, it's another issue. Thank you for your participation.
Yes, it's
Essential and it's very important. So yes, we will do that. And since we have a compliance officer now who's very, very tech savvy, Josh will be heading
Number 64 is for everyone.
that.
For the record, she did not put me up.
He asked the
I
question.
just wanted to give, really, that was a backhand way of giving Carol credit.
Yeah.
And it was well overdue.
8 years ago, I had this discussion.
We move a little slow here.
Very slow. I do have a question. This is so I know, so like, if a retiree comes back to work for the city, right? We stop their pension,
Correct.
right? They don't get recalculated after 3 years, right? Is that how?
If they stay less than 3 years, they're simply entitled to a return of their pension contributions. They get no additional.
But so, and the other question I had, what happens for the 5 years of health care?
I will defer to Marcia.
It stops at that point, because if they return back to work, our position is you must take active coverage. So we will stop their retiree coverage, have them continue to work active coverage. Once they retire a second time, then they take up what they have left over. We do not give people 2 bites of the apple, so it's 5 years period.
Yeah, I
Not
thought
an additional time. So we will not reduce it based upon the time. We will not do a deduction and that sort of thing. It will just start back up, and whatever residual coverage they have available, we will reactivate that coverage.
well, that's what they might lose coverage.
No, they will not lose
So it's
those
not
coverage.
3 years, okay.
They will not lose coverage. We
So
will
if
not
they-
do a recalculation like we do for a deferral. As if someone defers their coverage,
Oh, defer, okay, okay, I wasn't thinking of it. So it's not treated like that.
it's not treated
So it
like that.
stops, it's like the pension stop, and then they go
Yes.
through active coverage from the city or whatever. And then when they go retire back out,
We will restart their retiree coverage.
so what happens if it's past the 3 years? Do you calculate it or you don't?
We don't recalculate.
So they just pick up from where they get
They
off?
pick up where they left.
Okay.
In all fairness to the,
With the deferral, what are the conditions around the deferral?
a person has to defer at the time of return. So you can't stop and start. So if you defer at the time of retirement, then when you reactivate that coverage, we will do a calculation based upon the cost of coverage. And that's dependent upon what plan you're in, et cetera. Then we will notify you of what your actual entitlement will be.
So now, but that's what.
Yeah.
So if I retire at age 55,
Mhm.
just a lot.
Okay, nobody can, okay, but.
Oh, sorry, but well, but, well,
60,
so,
okay.
right, so 60, but I'm still covered under my spouse's, and I had to for it for a
Right.
couple more years.
Yeah.
Then, when I opt in, it'll be recalculate the value.
Yes,
And then, so then it might be a shortened period of time.
yes, that's right.
Like, see, that's not, you won't get the full, like,
You will not get the full.
so this thing is, like, you know, I make the whole year, right, okay. All right, thank you.
Oh, you're welcome.
Any other new business? Hearing none, any updates on litigation?
Very briefly, Brian Wilbur from Law Department. We have two new cases, Billy and Bradish and Yolanda Development. We're still awaiting scheduling order for those cases, and work continues on that moving forward.
We don't have any,
On the Van Potter case.
That's, oral arguments are today. So that should be resolved sometime soon.
You good, Carol?
yeah,
Motion to adjourn was made and properly seconded, and we'll move into the presentation. Oh, are you gonna take a break?
yeah.
All right, just take a time break. Oh, that's right, that's right. I was interested. I mean, that's what makes me look. Okay. Back from break and we'll move into the presentation portion of the meeting. First item is approval of our October 2024 minutes. The motion was made and properly seconded. We're gonna have discussion. I'll go to the roll. Brian. Ms. Law.
Approved.
Marsh. Sarah. Paul. Christine. Willie.
Approved.
And Carol. Approved. Motion carries unanimously. We will send to the plan activity report and update.
Good morning, everybody. Filling in for being this moment, we had a question. Apologize for not being able to be here. Our as we end of October, our claim asset balance was $2,042,216,796 with 26,328 participants. Just for informational purposes, we just got the numbers yesterday, the end of November. The assets are up 0.1 billion at the end of November. We'll be receiving all that. The 401A asset balance of $4,747,995 with 1,478 participants. Philadelphia Parking Authority has 650 participants in the plan with 5 new enrollments for the month of October. And there are 45 plan participants that are employees of the As far as the Roth money source within the plan, there's $81,608,489 invested in the Roth with 8,169 participants. That's a rate of 31% of participants in the plan of Roth money. 2,527 participants are contributing on a percentage basis. That's 13% of the participants. For the month of October, there are 3,490 calls to the call center, an increase of 301 from the previous month. And 79%, 20,832 participants in the plan have an online account registered with 34,579. And as far as the local team activity, there were 178 individual one-on-one consultations between the retirement specialist and the PRC with plan participants, resulting in 144 enrollments for the month. 20 consultations conducted using the My Interactive Retirement Planning Tool, and there were 23 group events and workshops, total attendance of 1,023 for the month of October. Buoyed by our 300-person FOC retirement seminar. It was a great event. In the beginning of November, I also want to thank Brian and Local 22 conducted retirement seminar went very well and gotten tremendous response from both of those retirement seminars. Folks reaching out, they're getting ready for the topic. That is all.
Any questions for Michelle? Is that into the Q3 report?
Thanks, Jackie. Good morning. The third quarter deferred comp mutual fund performance summary and some staff report. Unlike some of the prior quarters, we saw rotation away from technology stocks. Worst performance in the third quarter to utilities in best performance. Freedom. S&P was ahead of NASDAQ, rather than small cap stocks, etc. As far as the overall performance numbers, you see 11 of the 24 funds above the median over a 3-year period, 24 above the 5-year period, 5 and 7 were more than 5 years. Just a couple of notes and recommendations. Continued improvement from Dodge and Fox. Only period where they underperformed relative to peers for 1 year. Keeping that on watch. We see improvement next year. Just a reminder that, Area Fund is scheduled to be replaced in the lineup. I think that's actually this week, I believe. Assets will be at the mid-cap index. Also tomorrow, the U.S. Sustainability Index is being added to the plan. Participants have all received those. Etc. So no actual concerns at this point with any of fund managers. What happened to question?
Chris, I know there's relatively new. I don't think I'm missing. When did the fidelity growth in the other fund not showing up in the study?
That should be, I believe, I'll confirm the date after transaction.
Because I just missed it. What was the name of the new fidelity options? It's not
The sustainability.
sustainable. Yeah. Any other questions for staff on the Q2 report? Which, item 4, the Vanguard Night update.
Just briefly, this is the money that we use for the account revenue, like revenue paid to the plan to pay occasional expenses for the plan. It's held in the Vanguard Treasury money market account. Balance as of the order was just under $130. Received $22,173 in the third quarter in terms of interest income, which consists of rebates, participant fees, etc., interest and loan account. Again, very few expenses for this in one audit. When we get to the $100,000, that's so back to
Any question about item 4?
Before we wrap up, Brad, it's the end of the year, you know that. So Secure Act 2.0 had some stuff in it that could impact us, our members. Two things I want to ask you about. There's a new age-based referral, and that might not be the right term, that goes into effect January 1, I believe, 25. If you could explain that so we can understand how it might work or not work for us. And the other question, initially there was some legislation in there to force members, I believe in the special catch-up, they had to use the Roth option. Well, that got put on hold, I believe. Can you talk about that? Because those could have big impacts.
Absolutely. So there was two, I'll start with your second question first, if that's okay. The, what they call Roth, mandatory Roth catch-up contribution. Those put on hold. I believe technically it's January 1, 2026, but I'll check to confirm. There's a pretty big effort from not only employers, but also companies that do what Nationwide does, which is this is going to be a mess to administer. How are we going to do this? Can we put it off? And that lobbying effort kind of worked. So they were able to put that off, but I'll check to confirm. I believe it's January 1 of next year. There was in the legislation, and I have a handout here to make sure I get it right. There was a new, most of you probably are aware that within the 457, there's contribution limits that people are allowed to contribute. 2025, the base limit is $23,500. Doesn't matter who you are, that's how much you can contribute to deferred comp, regardless of the rate. If you're over 50, you can contribute an additional $7,500, which makes your annual contribution limit $31,000. There is what's called the special catch-up within the 457 plan, which allows you to do double the normal maximum. 2025 would be $47,000 into deferred comp. However, you can only do that for 3 consecutive calendar years, and it must be within 3 years of what's called your normal retirement age, which can be designated by the participant, but cannot be sooner than the date that they're allowed to get a full unreduced pension. Depending on which pension plan they're in, determines when they can designate that normal retirement age. It can be time. After that, up to 70.5. So if somebody can retire at 60, they can use that special catch-up age 57, 58, 59, or any 3-year period after. The Secure Act 2.0 added a new type of catch-up, which we in the industry are calling the super catch-up, which allows folks that are between 60 and 63 to contribute an additional amount, which is 150% of the over 50 catch-up limit, which for 2025 would mean $11,250 catch-up contribution if you're between 60 and 63. So the total contribution would be $34,750 that participants are eligible if they're turning 60 in 2025 or if they're 61, 63.
They're not independent of each other. If I was to capitalize on the super catch-up, that also eliminates me from doing the special catch-up.
You can only do one or the other, correct? Or one of the three. It used to be one of the others. Now it's one of the three types of catch-up.
So, and see if this thing got some information on it, so that's what I'm looking at, the Social Security Act. 2.0, so it's HR 2954, right? That's the bill that we go through the legislation on. I put this in January, no, you're saying in 2026.
For the raw, the mandatory raw. That's been delayed until 2026.
Yes, the IRS.
Okay.
The IRS put out 2 years, put out. You could do the pre-tax through the end of December 25, December 2025, and as soon as that's
The super catch-up, this 60 to 63 is effective January 1, 2025. And we have been, myself and our home office partners have been in contact with city payroll and One Philly and implementing this and how all this is going to work, all that. So we're involved in that as we speak. We've been told that it's going to be, there's a patch coming from the folks, from the computer folks, to allow this to happen mid-January. So we should be good to go.
Chris, the adoption of that law piece, obviously what's better to pay more taxes. We anticipate that being addressed next Congress.
I mean, certainly the change in administration, to one party to control of both branches of Congress, there, it could change that or further delay that based on lobbying. At the same time, you do have a bunch of folks, especially in the House, who are much more attuned to the deficit, maybe more reluctant to get along with some. But yeah, it's definitely possible to further changes.
I do have this little chart that we made up that I'm happy to send out.
Oh, yeah.
Thanks.
Pretty
Yeah.
rough.
And so can I just was, so in Seaford, send out the thing, the Treasury Department released a notice 2023-62. Right, the notice which gives some guidance on the new Roth catch-up contribution requirements for employees in 401k, 403b, and the 457 plan, and whose prior year Social Security wages exceed $145,000. Some more.
Just want to keep our eye on it.
That's a big change. A lot of my people.
Absolutely. I mean, you can keep that in mind as it works.
Any other questions? Any first one? And now we'll adjourn and move into the.
Hey, everyone. Good morning.
Okay, I'd like to call the investment committee into session. The first item is approval of minutes from October 24th. Is approved, copy that approved. Roll, Brian. Francois. Approved. Marcia. Approved. Kara. Approved. Paul. Christie. Approved. Willie. Approved. Carol. Approved. Kara, thank you all. This time I actually used Kathy's list, so it wasn't as random. And item 2, the private equity investment presentations.
Thanks, Rob. Walt, Vern, and Kelly and Jack Marchetto also made a few comments and have the manager here, but at a high level, this is a recommendation from the staff and the consultant for a total of $55 million commitment to EIB Capital Fund 5. Included in that 55 million is 20 million to the military side of also, as a reminder, pursuant to the approved asset allocation, we need to allocate from 125 million to 75 million roughly each year in private equity and pacing requirements. If this is approved today, then on a calendar year basis, we'd be at 130. So we'd be within that range, I'll be at that, Vern, and check. Comments.
Good morning.
Good morning.
We should be here. This is a recommendation. Staff has a high degree of position for the board, as well as my.
Which you probably usually do.
Yes, I do. But we always have a high degree in all seriousness, but to find someone that is a stand-up bearer. We always, Mr. Bielli has always mentioned that we try to do things that show leadership as far as pension funds. We're bringing a manager who is considered one of the best so far as what she's doing. She has a female firm, it's a lady-owned firm, 100% owned by the employers, based out of Houston. And this is a fund that's been around since 2009. This fund's, pension fund's relationship with this manager has been around since 2013. They're just joking about it. So she's been here for 11 years within our fund. She has delivered top quartile, first or second quartile in all our investments that we've asked her to. I asked her to put in writing, it's in our staff, or here on page 2, what her investment strategy is. And very succinctly, she's an engineer, but she wrote EIB capital investment, traditional and transition energy infrastructure with a focus on protecting principal while targeting private equity returns. And she's done that and then some. Chris was mentioning that staff had negotiated with her and been dealing with her since the beginning of 2013. And she continues to set the bar so far as energy and transition energy investments. She invests in traditional investments such as infrastructure and now transition energy, renewable, which is going to be 40% of this investment. She has $2.3 billion underneath management, targeting $1 billion in this fund for $344 million. And this pension fund is going to be also numbers because I just want to, this is testament to her. EIB 2, we invested $20 million in 2013. She's returned $20 million. The market value is right now $12 million. That fund, though it's mentioned by both Chris asked that we compare these private equity returns and infrastructure returns, So far as one of the returns, it appears as it's a third quartile investment. It's on its way to a second quartile investment. They just returned $3 million to us. So all the money that we gave her, she gave it back. She's still long $12 million. EID three, $25 million investment, distributed $22 million to us. They're still long $23 million. It's just been phenomenal. The IB4 and the IB4 top up, that was the last one between 2020 2022. They distributed $6.5 million to us. We're long 22. That has a 14.63.
Sarah approach changes at all?
No.
With the new-
No, and it's even getting better. So even if this fund were to move sideways, as Fran had mentioned one time before, given the various regulatory situations, we're convinced that the situation will be here. Even if it, hypothetically, were not to. The LTM last 12 months for Fund 2 has been 10%, which is the yield, cash yield that she's kicking back to us. 7% for 3, 9% for 4. So giving everything that is available from a natural resource and an infrastructure standpoint, this makes a compelling investment. And if I will just highlight, we were able to do a little Philly negotiating with her. And she was very, very pleased with talking to us. Being facetious. Page 5, we just show Fund 4 versus Fund 5.
Good to tell.
So 35 million in the main fund, 25 million in co-investment SMA, no fee, no carry. We hit a break point with the 55 million because we invested in Fund 3 and Fund 4. So we get a 25 basis point discount. So 2% management fee goes to 175. And then we have a 20% carry in the main fund. And 20 million, invest 20 million in no fee, no carry, we call it co-investment SMA. It effectively works out. Fund 4 would 132 in terms of the management fee, 15.56 for the carry. That's showing hypothetically if there was no exit. For us here, for the proposed fund, it's 0.92%, low 1%, and the carry gets reduced to 12.73. And when you go down showing with exits, which is reality, she's going to be selling assets, realizing gains. It goes from 103 in Fund 4, the management fee 0.72%. The carry still 12.73. What that effectively means for our $55 million investment for the life of the fund is we're saving hundreds of thousands of dollars.
And it's cheaper than the last one, so you have more to co-investment. Is that right?
Correct. We did a little negotiation.
It's two things, right? It's as a continuing partner, reduce the management fee from 2 to 175. And actually after the investment period goes from 1 to
Oh, I've
half
got
one
this
for it.
Yeah.
But the biggest impact is the co-investment. Systems.
And her investment thesis and her management style remains the same.
Is there anything different in a co-investment from the investment? Different opportunities or same thing?
Well, she was going to speak about some of the things that this renewable natural gas investment thesis.
Sorry, that's different. So is there any difference in what would be available in co-investment?
We'll do the same investments in.
Same investment, yeah, I'm sorry. Yeah, same investment as in the main fund, in this fund, where she'll be able to take a bigger position in some of the more better investments that she could have before.
These are, I don't know a lot of statistics, but a lot of things are real because of the high demand for investors for private equity. I believe private equity funds are holding steady with their fee structures. Otherwise, they're not coming down as much with fee structures. If that's generally true, this is a good option. Would that be an accurate statement?
Yeah, I would say that's accurate. I would say there's not a lot of room across the market in that 220 structure. The only way to really press on the fees is having that co-investing structure, no fee, no carry. And a lot of groups put caps on sort of what percent, could be a fund commitment and co-investment. So we were able to negotiate a higher amount in that side part and bring down the overall fee. But yeah, you're correct. It's been pretty sticky at the 2 and 20.
So in this environment,
A shout out to the Philly Ball Department. Dan, who, that was the first deal that Dan did. You really have to, so, for sure.
Thank you all. Very good. Have any other questions for everything? Okay, great. Let's go.
Yeah.
3 years, 3 months, and, really, no, I like it.
Yeah.
I work yeah.
How long?
Oh.
We got her time.
Yeah, we got him right. Let's sink it.
This counts towards your 20 years.
Get started.
Sorry.
Yeah.
Well, good morning. Good morning, everyone. Thank you for having us. Patty Melcher, founder and managing partner of the IB, and Dave Fein, managing partner also. We first thank you so much for all of your support. We appreciate the support as we've grown.
Thank you for your return.
Oh, wow. You're welcome. That's our reason to be. And so we appreciate the opportunity to present to you. One of the things I thought maybe I'd give a little bit on my bio. Vern had touched on the importance of community service, and I'm not sure how much of some of this I've shared before. I have an engineering degree and an MBA. I started in energy industry and investment banking in the mid-80s and had the opportunity to join an early private equity firm in 1989. And it was energy focused, and I loved it. We were helping companies grow. We were giving them the capital that they could create good businesses, and did that about 5 years. And then life got in the way, and I had a special needs child, and so I needed to make a change to become her. And so I left that job. Ended up starting a school for children with disabilities. So I spent 7 years. Where my business plan was fine. I spent 7 years doing all the back office, the operating, everything business related to the school until the school was financially stable enough just to afford a business manager. Obviously, I didn't get paid, and that was a very rewarding experience. The school is in its 27th year now. Serves over 160 kids a year. It has made it's just incredibly impacted, changed the lives of thousands of kids and their families. I still get emotional when I talk about it. And so that really influenced me. And I was also working to generate income during I was doing too, and staying in the energy industry and doing sort of investment. But in 2009, I had the opportunity to start the IB, and a capital partner who trusted me that we had worked together before. Put up most of that capital. And he was backing me just like as a management team, just as he'd backed a number of other companies. And so starting this later in my life and with my experiences is how do we build a sustainable, company that has a good culture that is, creating value for our investors and also changing the lives of the entrepreneurs that we're backing too. And so that was a whole background of why we built the team and the culture the way we have. I think we do have a differentiated culture. I think we definitely in energy PE, we are very diverse and, so, you know, it's all come together and looking back after 15 years, you know, it feels pretty good. And so number one is how do we make returns for our investors? That's our job. But how do we do it the right way? So we're getting ready, we're raising Fund 5. We continue with our same strategy, our same approach. We are in the lower middle market. Ticket sizes, our equity checks got a bit bigger as we've grown some, but we're still the same strategy. We're writing equity checks of 50 to 150 million, 8 to 12 investments per fund. And it's all aimed at investing behind entrepreneurs, management teams, so that they have the capital they need to grow their business. We look at everything on a return on asset type of basis, like our underwritings don't include leverage, we're doing unlevered because we want to build sustaining businesses. And we like the energy industry, in particular the infrastructure side, because you can protect your principal by the contracts and the customers that you have in your business. And that helps you protect that principal where you typically think of, you know, energy being fairly up and down commodity prices. We have to succeed to stop that. And so that's how we think we are looking at potential investments, backing, you know, as we do our analysis, and how do we take it, protect that principal downside, but also achieve our private equity returns. Recently this year, we've had 2 exits from midstream companies. You see them there by H2O. One was a 4.1x and one was a 2.1x. They both, on a net basis, they both, gross basis, they both exhibit how we can protect our downside and still achieve those returns. We also really focus on cash distributions. And so particularly in today's world, by making cash distributions from our companies that are mature enough to make distributions, also grow, we are again protecting that downside. So we are currently raising, you know, Fund 5 to close on about a third of it. We have already had 3 investments in the fund. David will touch on those in just a minute. They're going to slide 3, just talking about where we invest. So I talk about the energy industry. You know, today's world, you know, people ask, why don't you just raise a transition fund, just a traditional energy fund? We look at the energy industry as it's all energy, whether it is traditional oil and gas or renewable. We did our first renewable investment in 2010, not because it was particularly because it was renewable, but it did our underwriting criteria. It looked just like a midstream investment to us, landfill gas, renewable natural gas, create power. So over time, we built that expertise in renewable transition, and we will continue to do that. However, we will be, you know, the U.S. and the world will need traditional energy for a long time. I mean, people need reliable, affordable energy. Our role is to do it the right way. So because we've had our exposure to transition to renewable, we've been thinking about reducing emissions for years. We started our ESG, you know, approach years ago. We've always been focused in all of our investments, used to be called health, safety, and environment. Now we thought now maybe called ESG, but building assets that say don't hurt the environment. And in today's world, there's so much more emphasis on emissions because we can measure it and we can reduce it. We create value on our exit by building good assets, even in the traditional space, that have where we can do our part to lower emissions on that side as we transition to a lower carbon world. On page 3, we put about a third of our capital historically into renewable and transition investments. And our returns are similar between our traditional energy and same investments and our transition. And so we will, we underwrite them the same way, and we will continue to look for the transition investments that we meet our return profiles, that where we can understand we're not taking technology risk and things like that. We want to do infrastructure related investments that can achieve our returns. Going to page 4, I'm probably walking too long. Sorry. This shows our investment committee across the top of the page. 43% of our investment team are women or 30s. That is unusual for the energy space, and it's something we are proud of and we think adds value. Having that diversity of thought, learn from experiences in the Joy School. People, like getting people together that come from different places, think different experiences, and then collaborate leads to better decision making. We are 100% owned by our employees. Politician, as other groups may have. We built our investment team to 35 people, and that includes both the typical finance backgrounds and operational and engineering backgrounds, because we really want to be a resource to our management team, to portfolio companies, to help them through the challenges of work, because we've been there a number of times. Page 5, just touching again, kind of some of the key principles. We're not looking to debt for our returns. We use what we consider appropriate levels of leverage working capital, performing those things depending on the asset. Everything we underwrite, we underwrite based on the leverage. So we are looking to the assets, which back leverage, we're doing this. Yield is important. Building companies that generate cash flow and then reinvest it as they're growing, and then start distributing that. Again, I talked about principal protection and the size, control, and then that allows us to have that control over how this companies.
When you look on page 6, if you think about the aggregate amount of capital that we've invested over the last decade, or that is active today, think of it as half of the equity is distributing yield on a consistent basis quarterly, and the other half is generating free cash flow that we're compounding upon itself. So it's a mix of both. We like having, from a portfolio perspective, we like having a mix across that 8 to 12 investments, because we are at the portfolio level shaping that downside outcome by continuously sending distributions home. And if you look across funds 2, 3, 4, which you guys have invested in, you can see the impact. The green is the distribution, the quarterly distribution coming back to you from a DPI perspective. And the dark blue is where we've been monetizing it along the way. So distributions also create, especially if you've got appropriately levered balance sheets, they create optionality on when you look to exit. So we are always looking at our reserve price. How do we, if we're going to hold on to something versus sell it, are we sending money home along the way? So having the optionality to distribute back our return or hold it means we're not as reliant on the exit market to give the returns that our investors are looking for. And highlighting that the most is Fund 4, which we closed in Q4 of 21. We've been able to return 30% of our invested capital without any exits. So that gives you a sense for why it is important when we think about portfolio construction, giving both that access to return of capital and yield as we continue to have our portfolios mature. You go to page 8. As we think about capital allocation, the thing across the last 15 years that we've done is we've kept our underwrites very rigid. Like, we know when we find an investment we like and want to allocate capital to. So we're very nimble across the energy landscape on how we want to invest, but the manner in which we think about the key variables of that allocation, we're pretty rigid on. And that we haven't allowed our fund size to grow too much to where we would risk that underwriting. Having co-invest capital alongside of us is very important, because we're able to underwrite to the fund, not change your underwriting principles, but sometimes you find larger investments than we would typically fund within the fund. So historically, having access to that co-invest is very important. I know it's important to you all because it allows you to blend down your being carried expense over time. But it's equally important to us because it allows us to adhere to the manner in which we earn. You can see the blended impact of being carried for you in both Fund 4 and then proposed in Fund 5. And if you go to page 9, when we think about the activity level and how quickly we allocate capital, again, having access to invest across a broad spectrum of both traditional and energy transition related investments mean we're not stuck to one part of the energy value chain. We've found an ability to invest across both areas where sometimes the traditional energy markets may be closed and the transition markets may be open and vice versa. And that's both for investing into the companies and also exit.
Now, just note, next couple of pages, we talk about ESG. We established a kind of ESG policy framework after 2016. We report scope 1 and scope 2 emissions across all our companies, whether they're traditional or not. Page 12 just shows some examples of abated scope 2 emissions. Company in the middle, Haynes, we were actively pushing that company when we first acquired those assets to improve their emissions footprint. They went from middle of the pack to the top decile performance within their peer group. And that creates value because it attracts more customers to their system. Because their customers like that also.
We'll hit on a couple of examples of investments that are in Fund 5 already. Go to page 15. This is the first investment in Fund 5. It's a niche renewable investment. Think of this as a carbon negative fuel. What the company does is it takes methane that's released from large collection points for dairy manure. It uses a midstream process where it'll clean up that gas and then it turns it into a transportation fuel. To give you a sense of the environmental impact of taking that methane out of the air, it's generally used in 18-wheeler gas trucks. You can see one in the bottom right-hand corner of how it looks when it's getting fueled. For every truck that is using our dairy renewable natural gas, it has the environmental impact of taking 4 diesel trucks off the road. So it has a material environmental impact. This is a company that we first invested in 2017. They're based in Chicago. We sold it the first time around for y'all's benefit 2019, and we got 2.7 times our money. We had a good relationship with the management team. They still had a bunch of projects they wanted to go build. So we continue to back that management team and continue to build it. So this is the kind of renewable we like because it's relying on the existing infrastructure. You don't have to invent anything to use this. It's the existing trucks and existing pipelines to get the gas to the trucks. So
if you see this invested in 3 and 4 in this, what extent do you think Fund 5 will have companies that you've invested in 3? That's a good kind of repeat over.
We've got a couple. So we sold our water midstream company in Fund 2, and we're trying to see if we can work with that team again in Fund 5. We like partnering with people that we know. And
this is the only time that we've actually did across fund on a different basis. So everything else we've invested at the same time. If we were at the end of Fund 3 and beginning of Fund 4, going into Haynes at the same time. So this was a little bit different when we used a third party.
We like working with people that we know and we understand. There's a education part around risk tolerance. It's one of the reasons why we like doing fewer deals per fund is that harmonizing around how you think about risk, whether it be operational risk or commercial risk, are very important aspects to us. It's one of the reasons we control investors, and we like working alongside the management team. So when we're partnering with a company, we're both partnering with them on the operational side and the financial side. And that's why we like having a diverse team that has both operational backgrounds and finance backgrounds. If you go to page 16, this is a good example of a pipeline asset that's in Fund 5. We closed this on September 30th. This is a natural gas pipeline system that feeds into the state of Florida. So the macro tailwinds are Florida's second largest growing state in the U.S. These pipelines feed industrial use and mainly power use. 100% of the revenue here is backed by investment grade contracts that are take or pay, meaning it doesn't matter how much volume goes on the system, we get paid regardless. And it is, the remaining contract life is over 20 years. So we bought into this joint venture with NextEra. NextEra is a $175 billion market cap company. Our capital is not fixing any of their problems, but they wanted to have a joint venture partner that can help them deconsolidate their debt that they use to project finance build these. These pipes were built in 2017 and 2022. So the newest pipes that go into the state, the contracted cash flow, 100% investment grade over the next 20 years, generates $4.3 billion worth of cash, and our buy-in value was $3 billion. So assuming you could stop all gas flows into the state on our pipes, we're still going to get $4.3 billion worth of cash from investment grade counterparties. So when we talk about wanting to be investing in the midstream space, these are the kind of assets that we like. And when you look at the net return that we're looking at for Fund 5, it's a 14% cash on cash return over the next 10 years. So that gets you to a 1.4x over that time period. And if you look on page 17, you can see that the terminal value that's driving a 3.6x gross return, we're not relying a whole lot on the terminal value to drive that return.
Is competition for investment over time? Part of it.
So a lot of capital has left the traditional energy space. So there is less capital on capital competition. So the buying values have come down, like where the multiples for acquisitions are. A lot of times the competition is the seller doesn't want to sell at that price. That their whole price is above what the market is telling them. On the transition space, a few years ago, there was so much money chasing transition. We kind of expect as that's had some that there may be opportunities in the future to step in on some things.
A lot of the funds in the hard asset infrastructure space have gotten. I think it's been 20 minutes. Yes. Have gotten much larger. So you've seen the funds that remain in our space have gone from $5 billion funds to $20 billion funds. So one of the reasons we were able to win that joint venture with NextEra is we stayed below their capital size. They just couldn't compete because a $70 million check for us is critical and important to our fund. It's not as important to a $20 billion fund.
You mentioned 14% anticipated goal return cash or cash flow over 10 year period. And the reason I want to ask about the 10-year period, we hear about a J curve. Page 6, where you show the fund 2, which I think the initiation date was 2013. What is the 36% gross capital work? Does that mean there's still 36% of the capital still at work 11 years after the start of the fund? Is that negative or positive?
For Fund 2, that is negative. Fund 2's harvest period occurred during COVID. So when COVID hit, the markets closed for 3 years. We went in year 7 of the fund. We actually went to our LPAC and to our LPs and said, look, because of COVID, the market's going to be closed. We will stop taking half of our management fee in cash as a way to indicate to our LPs that the market was going to be closed longer. So we tried to manage the cash burn knowing that it was a closed market. We have been able to exit 2 of those investments within the last year. You can kind of see the acceleration. So COVID basically closed the traditional energy markets for 3 years for us. So we're now catching up on that.
Now, Fund 2, looking at Stanford, it's showing negative 21 over under. The staff managed that didn't show. What is that for?
Relative to the S&P 500. So we don't have the benefit of Google and Nvidia and a bunch of other stocks that have performed very well within the S&P 500, but relative to energy indexes, we have performed better than the energy index.
We believe that 36% gross capital is established going forward.
Oh, yes, yes, yeah. There's two remaining investments, and actually the leverage on the remaining investments in Fund 2 is 0. They have no leverage. So they're set up to continue to yield back to the investors. There's in aggregate a 6% yield on those remaining investments coming back to the investors. So moving forward, we agreed with the Fund 2 LPAC not to charge fees. So there's no management fees remaining on Fund 2, and we're working for the carry in that remaining 36%.
How long do we get a whole bonds at 6%?
Oh, the yield? It's actually going up over time.
How long?
Oh, we want to try and exit those in 2025 and 2026. You're welcome.
Thank you, sir. So I grew up in Midland and I've been since the 20s, so it was slight Texas accent. It was really good. I'm here for 25 years. Yeah, thanks. I appreciate it. That was a lot of fun. Like probably that. This work.
So is there a question?
Yeah. It's so lovely. Like every time you said like, you said H.C. Wheeler and Patty, right? You have more than that. I mean, I don't know if I used to still say old. I don't say yep because that's the Texas way of saying it. W. And, yeah. But it was really nice word.
Trip down
It really
Thank you.
Okay.
Will you be available later to talk to Tara some more?
I'll introduce you my friend from Houston, dear friend who is out there.
Oh.
Thank you.
Thank you very much.
Thank you very much.
Thanks a lot. Thank you.
It's my daughter and after it's water. It's daughter away from Keith. Keith. Well, I noticed the water, you just did that's one time.
So, back to the meeting. Yeah. Any other questions or discussions? Bernie, just restate what the recommendation is.
We, staff and Marquette, recommend a $35 million investment into EIB 5 and a $20 million investment into EIB 5 SMA co-investment for a total commitment of $55 million.
Is there a motion? Set the staff's recommendation. Second. So it's a movement properly seconded and I will call the roll. Right? Swan. Marcia. Tara. Walt. Christie. Billy. Carol. You all approved it?
Irving Calvin. Thank you, Jack.
I'm sorry. Smile, you guys smile. Wait, you're gonna take this one. Oh, with us, sorry.
Staff report filed report for the local bank search. So pursuant to the city code, required to bid this out statutorily, so we posted the opportunity from May 31st until July 3rd. We received 3 responses to the RFP, the incumbent for the trust, State Street, and US Bank. All met minimal qualifications and proceeded to the next regular usual. Just briefly on each firm, State Street, which many years ago was actually the custodial bank. We were applied concerns for the biggest concern staff had with this particular respondent was its by far making was suspended with security threats in worth of $3/4 million. The second respondent, US Bank, we did like actually facility work for PW's pension plan applied. We have a high conviction. One of the team members who actually worked on the board's account, and the board was concerns here were relatively small number of public pension clients with similar and then a little bit on the pricing structure. The annual minimum is higher than the incumbent, and then there is some of the fee was based on net value of certain. That brought us to Northern Trust. The board's worked with for the past several years. They have the lowest fee, $475,000 flat, inclusive of securities lending. Starting on page 5, we're going to do some additional details about the work done. We note that the level of work we believe has increased as the size of the fund has increased. At new relationships with private equity and managers, we haven't seen any about that. Both of the reference calls of other public pension funds were positive. We also continue to monitor their work. You'll see on page 7. So for those reasons, as well as one additional point, in our staff's opinion, when you're going to make a change to the custodial bank, it's probably the most difficult undertaking of any contract switch from one provider to another. So unless there's a deterioration in services with the current provider or significant savings with the new provider, it's a tall burden for the bank to. In this case, we didn't see that. So that's
but I thought, so I see you do a lot of background stuff when you've been trusted, you don't have finance. So why is that?
Because they were we went into additional detail for the bank.
So you did it.
Yeah, we provided.
So in US Bank, these people that go to trust you
There.
all right. I would like to see what that's or they don't get clean out these things that go to trust. Because I know there was separate positions, but you can be a committee to this. Can you do a committee to this or this staff and so?
No, we didn't do because of the nature of the search, because of the limited responses. That's what we need to do. Yeah.
I think that's, I think, with the day before we do the truck, right?
Yes, and I think that was a big part of it. Student service routine. Staff routine. Back. I'm reaching back here several years to support tax services. So we consider it or like. So just wanted.
So we let station people to come in, we let station people to the day before, so we went to commit this, so then we let the day before then to Northern Trust, we went to committee there, but we're not making a recommendation to go to committee.
When we renewed State Street, we got get State Street started with us. So when we switched, we had issues with the always with the community and exactly the new with the same company.
So we let station get us safe again and went to Jake Morgan, we looked for it. Because with me, RB, and, I'm trying to do a committee to do the interview to RFP. That's what I remember. So every time we had to change the sort of right or give it up for the RFP, we quit. Staff did the background stuff and they gave us the advice they wanted us to interview, which committee we did do what that staff recommendation. If y'all want to do that, that's fine. I'm just like to say stuff in here that I would like to see for both, for all of them, that this is well displayed for Northern Trust. That's my.
Carol, we're not changing this. The president.
How you know? That's their recommendation.
Well, that's
That
the
ain't necessarily the vote.
That-
Is that correct?
That's true, but
Okay. I'm just saying, like, you don't have all the information, but
yeah.
you can just go ahead.
So what's the information? I understand your point. What's the information that you want under two? We have that.
So I would like to see the diversity and inclusion statement. That's just me. And if I'm the one who don't want to be vote, but that's what I would like to see. So I'm just saying, I would like to see some more information, whatever information that's there for you to come up to their decision and Northern Trust based on moving to another line. And I know it's a hard process, but that was just, that's me.
Well, we're happy to provide you any additional information on the rationales for the recommendation, give us from page 5 and 7.
Okay.
That walks through, all the recommendation. But to the extent there's additional information.
I think Carol's point is, even though we're keeping the improvement because there aren't any disinfectants, why we would change, I think her point is that she would have liked to have seen all the background information.
Oh, yeah, no, I get it. And then I guess, but what's the timing of the change? If there was change.
Is there a deadline that by which we have to change by?
Yeah, that's when the contract.
Oh, yeah, that's the question.
I believe it's relatively soon, based on past precedent. We had to get short extension. Like this is the transition process itself. State Street, J. So that was a period. Alternate. But that the actual switch is actually
I want to know the contract date.
Yeah.
That's
the effective date of the new contract.
I don't have that. I can pull it and get it.
everybody's come forward with their recommendation, we take place. That's all. I'm not being trying to be problematic. I didn't like.
No, no, I get it.
As I said, this information, if I'm gonna make a vote, I wanna be, y'all with me, not, you know.
So given that, you get the motion. There a second? Probably seconded. I'll call roll. Ryan. Claude. Approved. Marcia. Tara. Paul. Christie. Billy.
Approved.
And Carol. Motion carries. And you get that information. Yeah. Yes. And then forward.
Had the October flash report, executive summary in the board materials. October and down maybe slightly less than overall policy benchmark negative 2.0. We did send out extremely preliminary numbers for November. I expected to change a little bit. We're not going to spend a lot of time here, but there was a strong rebound in the plan. Preliminarily, November 2.6 to 2.5% net fees. Just a few things we're keeping, an eye on as we move into the year. Trying to get a better sense of the medium term direction of interest rates. There's another surety, but where we go from there, I think is much more clear. Overall, PPI numbers higher than expected yesterday. There's also concerns about continuing strengthening of the dollar and the tariff surveys from that inflation. Obviously continuing with strife and issues in Ukraine, Syria, backdrop in China and Taiwan.
Any of that certainly. Change the way we look at it.
Now, from my perspective, the only thing that could impact is the timing, maybe slight change of recognition which we talked about, what we call this the first half. I think that we got it. So I think it changes some of that. I don't believe.
And when is the time?
So I think, Marquette and staff, we were going to give a few thoughts on that as part of the investment performance, but from my perspective, given what the cash accounts continue to pay, I don't believe there's a huge rush, particularly given not all, most of the remaining money is going to be saved. Yes. Mid to high four. And given that most of the remaining dollars are scheduled, at least pursuant to the recommendation, we don't believe there's a huge rush. To afford last year worth of and then just a couple other things before we obviously we touched on this a little bit already, but the Chunky administration and the lessening regulation, the extension of tax cuts with 2023 tax cuts. And then we've also additional adopting in Western document. And how that might the internet. So with that, turn it over to Dave.
Yeah, I mean, I'll echo some of Chris's comments, and even though we don't have a crystal ball with respect to, Japanese money, I think, we can say with certainty.
Some indication.
Yeah, there's probably gonna be a little bit more variability over the short term, particularly as the country, the world kind of readjusts to the new administration, trade around tariffs, obviously, that's gonna be disruptive, but I think the confident we are gonna go back to winning again and things being fixed as a country. So that's the positive side of it. With respect to performance, I know that there was a quick snapshot and overview of Otis Partners. We discussed that with staff. And really with Otis Partners, the reason for their relative underperformance is very explainable. We would put it down to the cap size of their portfolio. They are a small cap manager, but they are on the smaller end of small cap. So when we think about some of the small cap investors out there, some of their peers will let their winners run tremendously, and they may have some mid cap exposure in the portfolio. And as we look at large cap, mid cap, small cap in the month of October, October was a month of uncertainty because the media had us all due that this is going to be a very close election. It's going to be closely tested, and there was a lot of uncertainty with the markets ahead of that. Small cap sold off, and then mid cap did better. So a manager like Otis Partners being the smaller cap man, with a lot more volatile relative to their peers, their benchmark.
I mean, as they're growing, this type of thing out.
Yeah, so they have I don't want to say more discipline, but their approach is nothing more than 5%. They don't let their winners run to too much versus some of the other funds out there in the peer group. And then within the index, if you look at what's rallied versus what's in this portfolio, this portfolio would be at the smaller end of the spectrum. When you think about small cap, the stocks that really rallied in November would have been at the larger end of the spectrum. And then ultimately, the stocks that sold off in October, again, that same trend, smaller end of the spectrum would have hurt those stocks during a sell-off disproportionately. But as we look at this and that return stream, whether it's on a calendar year basis or even shorter term basis, you will see periods of dislocation in that performance. So, their ability to catch up, particularly over the longer term, is shown in their numbers, and there isn't a concern with the relatively short term underperformance we've seen in that strategy.
Are they trading because the size of the particular company that they invest in exceeds the mandate of what they have? For example, it kind of gets above whatever the goes on. I don't know what micro cap versus small cap versus mid cap is. Or are they disciplined that you start trading because the company is beyond that amount of money, or are they trading for profit? Time.
So it's a little bit of both. They're known for they call it return pattern recognition. So they're a fundamental manager, but they have quant restraints in to add the discipline and take away the human error or falling in love with a stock. That proneness that can come if you don't have those tight bandwidths in. So they are definitely disciplined in terms of taking those profits, and then they're disciplined in terms of not creeping too far up in terms of on the cap spectrum. So it's a little bit of both when all is said and done. And then from a philosophical standpoint, that would owe them more on to the quality side of things, more onto the value side of things as well. And as we think about the environment and what's typically done well, even in a sell-off, it's been your growthier names. During the rebound, values lagged a little bit. So that also explains the style, also explains a little bit around this relative performance.
This helps sound like in the long run. The sound clearing.
Yes.
In the 2-year period, you can see the actually on each of the measurements. And that's because of the returns. Fundamentally, some fundamentally unsound growth. You see the 2-year period where the benchmark comparison.
That is correct. And in fact, if we go into this is off the market cap book, but
page 32.
Yeah, page 32. If you take a look at their calendar year results, this will just give you a sense of, short term, you may see the noise, but, bigger picture, they're doing all the right things. So in a down environment, for example, being a little bit more conservative definitely helped them in a year like 2022. Benchmark was down 20, they were down 11.7. So, losing less, tremendously less than the benchmark, that's a plus. 2023, a strong rebound year. They participated in that rebound, so they did really nicely. So they were up 21.1%. Benchmark was up 16.9. So, them being disciplined and perhaps a little early or a little ahead when it comes to trades, that's typically translated to good performance versus the benchmark, even if that's short term dislocation.
Sounds like we're hired. So it sounds like they're still doing what we.
Yes, exactly. Yes, exactly. Yep.
Any other questions? Thank you very much.
Thank you.
In terms of the staff report, Brandon mentioned a couple of RFPs. We have the passive domestic index RFP next week on the 18th. And private market consultant reissues for the 17th. We will keep the rest of the work and that's what we complete stuff that's there. Securities lending. The month you can see as we get close to the end of the year, we're over $1.3 million. 53.3 program started. Reverse and local AUM on a combined basis is 1.27. Diverse managers broken out 55.4, 9.60 for Philadelphia and surrounding county. And then the first three board meetings are 2025, January 23rd, February 27th, and March 27th.
Brandon, that.
Can I, the 23rd, and we had that, we'll change it to the 30th. Or, yeah. Or another, yes.
Just a heads up now, that today's December 12th. That's fine, Chief. That's gonna be a lot. We people, 5 cases. We got an extra period.
Last year.
I didn't think it let me, change it, but you know, you don't have.
That's fine. I'm just giving a heads up for the cases. People,
Actually, I'm going to calendar for you.
Yeah.
Yeah. So, Carol, it's already changed on my calendar.
Yeah, wait, have to change the mind.
It's different yours too?
Yeah. Okay.
All right.
Yes.
Anything else? Any new business for investors? Any old business? Move from secretary, pull the full board in this section. There are motions to approve the actions taken by the investment committee.
Moved.
Second. Moved from seconded. James. I approve. Francois. Approve. Marcia. Paul. Approved. Christine. Billy. Approved. Carol. Approved. Motion carries. Any new business? Old business? Bye. Yeah, people have seen it for a while.
Call it what's to have some fun.
And then for the baby.
Oh. Thank you.